open the meeting of the Finance Investment Committee of Vallecitos Water District. Items for discussion today, we're talking about the fiscal year 2017-2018. There's no public one here. And Les, it's up to you, or Gina.
Okay, so you're just gonna hear an update from our new auditing firm, tell you how the results of the audit. It's not final, I don't think.
It is not
It
final.
will not be final until we bring it forward to the board on, tentatively scheduled for December 5th.
Okay. And here with David's file.
Yes, sir.
Yes.
I have one question to ask, and the general manager of Northern West doesn't know it. The last time we hired a company, this committee was involved in the hiring. We had 3 or 4 different candidates, and then we met with them at least one to see if there were a couple of issues we wanted to delve into deeper than the normal. And we didn't do that this time.
We actually discussed whether you wanted to be involved in the interview process.
Discussed with who?
Us as a committee. We all discussed that, and it was decided that we would just do the interviewing process and keep you in the loop. And I brought it back to the committee when I chose them, and you said, "Congratulations, it's your first decision. Good luck with that." Pretty much.
Yeah.
That sounds like something else.
Oh, after it was done, yeah.
So,
yeah, okay.
Now I'm kind of regretting not putting you in it because they're. No, I'm just kidding.
Told him he was not allowed to throw me into the bus.
I think it's that was, you're talking about the RFP process when you were selecting an auditor, right?
Right.
I think that's fine. We have participated in that, kind of like the interviews, if you will, which I think the kind of the first go around, since we were both relatively new to the board, it made some sense to kind of get a little understanding of how that all goes down. But what I would have liked to have seen on this particular one is kind of like a kickoff meeting though, with the auditor,
Yep.
just because that's one of the conversations. That's where we'd like to have the conversation about maybe we can give them some ideas of where they can maybe scratch the surface a little deeper in one particular area, and those types of things. So in the future,
Absolutely.
if we can have like a kickoff meeting with them, that'd be great. Thanks.
Was there on a 3-year?
They're
1 year with 2
3
possibilities.
3 with 2 1-year
2 1
extensions.
Right.
Yes.
All right, so Wes, did you need to say anything, or is Shannon
I
gonna
think
jump in?
we're just going to jump into Shannon's presentation.
Okay, great, thanks. Thank you for having me. I'm excited to present the results of the audit, or the draft results of the audit so far. This is for the year ended June 30, 2018. So we will be issuing it actually says a comprehensive annual financial report. It's actually basic financial statements. My apologies, that's incorrect. We will have an unmodified opinion dated November 30th, 2018. Again, that's revised. That's per my conversation with Wes earlier. It's actually going to change to November 28th. The unmodified opinion is the highest level of opinion you can receive for an audit. There is also an emphasis of matter noted within the audit opinion related to the implementation of 2 new accounting standards and a prior period adjustment. The 2 new accounting standards that were implemented were GASB 75 and GASB 89. So GASB 89 was the little one. It just basically eliminated the practice of capitalizing interest on debt as a part of construction cost. There were no adjustments related to that. GASB 75 was the big implementation, so similar to GASB 68, but for OPEB. That resulted in a prior period adjustment of $1.7 million, which reduced the net position. And unmodified opinion basically means the financial statements and footnotes are presented fairly in all material respects in accordance with generally accepted accounting principles. We also issue a letter, communication to those in governance. It's also referred to as the SAS 114 letter, and the government auditing standards opinion. So the SAS 114 letter is sort of the wrap-up letter. At the beginning of the audit, although we didn't have a kickoff meeting, we did have Wes or Glenn send the SAS 114 planning letter, which basically states what we're going to do in the audit, and that if you do have any concerns, you can contact us directly. The communication to those in governance sort of wraps that up and says if we had any issues, disagreements with management, things of that nature, which there were none. The government auditing standards opinion. We didn't note any material weaknesses in internal controls. There were a few issues that warrant attention of governance, so I don't believe that you have a copy of the letter, however.
Actually, they do.
They do.
Oh, you do, okay. So it is this one that says independent auditors report. So it does have a couple of items in it noting some recommendations that we have. So there are various employees that have access to the financial FMS module that have the ability to add new vendors and change vendor information. Typically, we like to have the system limit that to employees that really only need that access, because it does help to reduce the risk of fraud in the disbursement process.
Good question?
Yes.
Why would we have someone that's not involved in it have access to it?
No, it's, everybody that uses GEMS has pretty much full access because of the sort of system limitations that or capabilities that we haven't yet discovered. If you are able to use GEMS, you can almost do anything in GEMS. However, we have compensating controls in other areas to make up for the lack of controls that are available in GEMS. And we also have IT working with Harris to implement those controls.
So you don't have the, does the system not have the capability to restrict some capabilities by user rights, or I don't know if I'm saying that right, but.
You are, and we think it does. We just haven't either got them implemented or haven't used them. Because we've had such a small accounting department in the past, we've had either 3 or 4 individuals in the accounting department. You almost need all 3 people to be able to do just about everything in the financial system so that you can function. Now that we have 4 in the accounting department plus me, we're able to put controls in place. For example, creating vendors. In the past, everybody that used GEMS could create vendors. Now we're making it so Fabi and Debbie can create vendors, Anthony and I cannot. So we're going to restrict the controls over that for us. And then Fabi and Debbie don't write checks, Anthony and I do. And then once the check is written, it has to be uploaded to Union Bank, and they won't cash the check unless it's uploaded. So now that when we upload it to Union Bank, there's a secondary approval required as well. So at no phase can you write a check to yourself.
Didn't we have, I don't know if it was last year or the year before, but kind of a similar recommendation that came up around payroll or the payroll system?
Signing of timesheets.
Timesheets, yeah. Okay. So maybe, since we've had a couple of, and I know these are recommendations, since we've had a couple of recommendations around kind of the same thing, maybe we could do just an overall, kind of be proactive and look at any of our systems that are related to that and see if there's any opportunities for improvement.
And that's where they actually did an excellent job this year because they had an IT full internal control testing. They did like she's going to go on stealing her thunder.
Yes, don't
But
steal
they had a
my thunder.
17-page control checklist that they sent to myself and to Matthias, and he sent it to the IT department, and it was just extensive. All the controls in every area of IT, and I'll let you kind of go.
And
into
I
that.
think that's one more thing, just not to get off my soapbox, but I think that's also one of the benefits of switching out auditing firms periodically, because this hasn't come up before. I mean, this is probably my 3rd or 4th year now, kind of going through the audits as a finance committee member, and I haven't heard this one before. So it's another set of eyes, found something, right?
And I will say she's going to bring up some more stuff that's similar to that.
Okay.
Let me throw a question over there. Let's just say for some reason we had someone that was intimately involved in all of our stuff, and then they left for whatever reason, they retired, whatever. Can they get back in?
No.
Are they not smart enough to do that?
There's no way.
Anybody that knows all of that?
There would be no way for them to get into our network without physically being here, and they have no login information. We have excellent controls over IT as far as logging in, passwords expiring, all of that stuff, so there's no way anyone could actually get into our system.
How many people have that information?
Our network information?
As far as logging in to be able to get to your information?
Oh, only me. So I have a unique username and password, and it expires every 6 months. So there's no way to do that. If I try to log in from a VPN, when I log in, I have to use my name and password, and then it sends my phone a confirmation that says, "Are you trying to log in?" And I have to say yes in order to log in remotely. So we have a lot of control over it.
So you're the only one who can get into that.
Absolutely.
And if you were to leave tomorrow, he would change the passwords and codes, and then you wouldn't be able to get into it either, no matter what?
Right. IT would shut it down, and I'd be locked out.
But what are the controls around that? That's a good question, actually, and I deal with this in my day job. What are some of the controls that you have that when somebody does leave, that we ensure that their both their physical access and their logical access is terminated in a timely manner? Other than just, John Jones left, you know?
Yeah, so that's a good question. I have to get probably Matthias to find out exactly what they do for that. But basically, they're, I believe they're notified by HR. This person's been terminated as soon as they leave, as soon as they walk out the door, and then all their access is cut off at that time.
Yeah, we get their keys, we get their fobs, so they can't come into anything, we deactivate their punch code, we disconnect their network access, so there's no more, they can't get across the line physically or electronically.
And it starts with HR.
Well, it's a question to ask HR at some point in time is, at what point in time do they do that? Their physical last day, or when they say, I'm walking out the door? When does that actually happen? So that we don't have to worry about our system being corrupted somehow. I don't know. Curious.
So your discussion sort of alludes to number 2, which was enhancement to IT controls to periodically review inactive user accounts. So I will talk about that a little bit more in detail later on in the presentation. And then we also had a prior period restatement related to some construction in progress that was completed, however, it just wasn't moved out of construction in progress to an in-service asset with depreciation starting. So the prior period adjustment was basically related to the depreciation of that asset, and it was about $1.4 million. And that was the last of the items from the government auditing standards letter. I do want to take a minute to say that Wes and Anthony were very well prepared for the audit. We do appreciate all the hard work and energy they put into answering our questions and getting the documents that we request. We are still hounding them.
She's not lying.
Yeah. So it's very much appreciated, and it does make for a smoother audit process when the finance staff is prepared. There were no material audit adjustments detected during the audit. However, we did have a few immaterial audit adjustments, and I will just note, like I said, they're immaterial, so we sort of do give the option of you can make these journal entries, or you can wait and correct them in the current year, and they did take the proactive steps to adjust every entry that we did have, and they said they were minor. There was $25,000 adjustment to reflect the local agency investment fund at fair market value, $225,000 to remove amounts that were reflected as due to other agencies that were no longer due.
What was the first one you just mentioned?
Adjusting the LAIF investment to fair market value.
I think it was the county pool as well, right? Was it both LAIF and the county
LAIF,
pool?
but I'm guessing
I think it was
probably both LAIF and the county pool.
Because LAIF and the county pool are both, in the past, we've considered them cash and cash equivalents. We haven't treated them at like investments, so they're not marked to market. At the end of the year, we just had them at cash value because we can take out LAIF today. So we looked at it like, if we can take it out today, then its value is what it is today. It's not, we don't have to look at it at market value. We're not gonna have a realized gain or loss if we pull a LAIF out. However, GASB 65 or something like that says that
31,
if they,
I think.
is it, yeah, it's an older one.
One of those.
Says that if they value it at market value, then we have to value it at market value. So at year end, we have to do that. They found that and told us about it, and we made that improvement.
Yes.
Is there a dollar threshold for the material versus immaterial?
Yeah, so anything, for us, our materiality level was 528,000. So anything over that amount you have to make. It's not a question of, I mean, you could say no, but then we would modify our opinion to say that there were adjustments not made.
Why is it 528? Is that a percentage of something?
It
or?
is a percentage, so,
Very specific number.
Yeah, why not just
Yeah.
500?
it's basically the total assets less the capital asset value, and then it's a percentage, 1% of that. So, and then we have this sort of in between where something is under 528,000, but over, I want to actually say somewhere around this 26,000 mark. You can make the journal entry if you want in the current year, or you can fix it in the following year. If it's under the $26,000 mark, it's just immaterial, and we usually don't even bring those up to the client. So these were all in between those amounts, but like I said, they did make the entries, and there was $100,000 adjustment to receivables as they were no longer expected to be received, and approximately $400,000 to remove some inventory, some dirt related to a capital asset from a prior year that was categorized as inventory but should have been part of the cost of the capital asset.
So what happened with the receivables? Are these water bills that you were expecting payment on at some point, and then they?
No, with the $100,000, what happened with that was there was a recycled water study that we were doing, and it was classified as a developer project. Developer projects are typically either they give a deposit, and if they don't spend it all, we refund the money, so we have a liability, or if they spend more, then we bill them for it. So it was incorrectly classified as a developer project. It actually was an internal recycled water project that we were doing. So we had it in receivables when it shouldn't have been. So it should have just been the expense to the district.
To follow up, can you tell me what this recycled water project was, and did the board know about it?
Yes, it was in the budget for 2015 or 16, and it was through Rob's group. So Rob could give you more information on exactly what it was. I don't know if you talked to him about exactly what it was. They did a recycle. Oh yeah, we'd have to have Rob Scholl involved to get the details on it.
I'd like to know the details on it, just because
Absolutely.
it was put in the wrong place and it's not showing, and it wasn't.
So they were using it to track the cost of the project. So
What was the project, is the question?
Yeah. Well, and so what they were doing was they said, we're going to do this recycle water project. I know you want more
I
information.
want to know who we is, yeah.
So Rob decided that he wanted to keep track of how much it was costing us. So he put it to a project. And the type of project they used was ECDC, which is our developer project. And it shouldn't have been that. It should have been an expense project, a different type. He was just using for tracking costs. But to get the details of the project itself, we'd have to ask Rob. And I'll ask him about it
So
later.
you say it wasn't a developer project, it was an internal project?
Correct.
So internally we spent this money
Yes.
somewhere.
Mm-hmm.
Do we know where?
I'll find out for you. I do not know.
Can you find out where the bills
Yeah,
are?
we'll find out. Was it in the CIP, or was it just a?
Yes, we had it booked to CIP, so it's easy to pull the
Okay.
costs and pull it. I'll get the invoices and find out what it's charged to. I'll get all the information for you next time.
Thank you.
These are the results of our compliance testing, which is related to the government auditing standards. So we test with compliance of laws, regulations, grant agreements, if there are any. So what we did for Vallecitos was we tested compliance with the government code, the California Government Code for Investments. We tested we tested the debt compliance and as part of the agreements, and then we tested compliance with the procurement policy. So for investment compliance, basically go through all of the investments and ensure that they're invested in accordance with the policy. And then debt compliance, we review a website called Emma to make sure disclosures are done that are required, that you're in compliance with the debt covenants. And then as far as the procurement policy goes, we do a random selection of 40 transactions, and that's based on AICPA sampling guidance. So basically, if there are more than 250 transactions, AICPA guidelines say 40 transactions are enough to get a good sample. If something was to go wrong, it would probably show up in one of those 40 transactions. So for those disbursements, we ensured that the amount paid agreed to the supporting documentation, the amount paid was correctly calculated, that there was proper authorization, that the account charged was appropriate, there was competitive bidding was performed if applicable, and we didn't have any exceptions, so that's great. And then I'm just gonna go over a few areas of our audit focus. So, as a new auditor, like Wes said, we don't do this on every audit going forward or every year going forward, but we do have a department within our firm that is a certified information systems auditor. And they do, like he said, they send out a questionnaire and then they come out and talk with IT and kind of like go over the questionnaire and any recommendations. So it is a 17-page questionnaire.
Wow.
And it goes over things like the IT organization and management, logical security, physical security, change management, network management, operations. You know, they ask if there's documented structure of the IT, if there are documented policies and procedures, if there are security products being used, is the data protected? I mean, it's very extensive. And the great news is that it came out pretty clean. I mean, there was one recommendation, which is in the letter, and that is to review user access of inactive accounts. And I think this sort of relates to your question about when somebody leaves, how do you know that they're not going to get back in? So that was what the recommendation was related to. We do a lot of internal control interviews.
Sorry, one more quick. Do
Yeah.
we follow that recommendation, whatever it was?
Yes, we're having IT look into it now. And what she's referring to is just regarding just Harris Gems, our financial system. Again, it's the same thing. It's when users leave, we haven't technically cut them off in Gems because it's just the finance system. There's only been 3 or 4 users in there. So like, I think they saw Chris Juarez was still in there and he retired a couple of years ago. Now he can't get into our system, but if he were able to get in the building and able to log in his computer, which he couldn't anyway, and he got into Gems somehow, he could still use Gems.
How hard would it be, I mean, reality, for an ex-employee to get in the building? Doesn't seem to be very difficult at all if they have a key.
No, they could get in the building, but they wouldn't be able to log into anything or use anything as far as the system goes.
Oh, okay.
So, I mean, even if you wanted to use a computer right now, you wouldn't be able, like if I gave you this and logged out, you'd be stuck.
No, my computer has, I wouldn't be able to operate, so don't worry about that.
So in relation to like the planning, we do come out, we have a planning meeting with staff and sort of talk about what's, you know, going on for the year, do our materiality, we do some risk assessments, we do a lot of internal control interviews, so we talk to people about disbursements, cash receipting, payroll. We test what they're saying, so our sort of little motto is trust but verify. So we normally, you know, trust what you're telling us, but we do verify. So if somebody says, I can't go in and create a new vendor, we will sit with them and say, okay, show me. Because lots of times people think they can't do things and they can, so we do just want to make sure that if they can and they shouldn't be, we let somebody know. We review policies for purchasing and employee policies. We assess the entity level controls, so not only do we do the department controls, but also the overall entity. We look at sort of the tone at the top, starting with the board, you know, the audit committee, down to the general manager, and how that information gets communicated to staff, and document, you know, how that's being done. So we didn't have any recommendations in those areas.
What do you specifically do about OPEB?
I'm gonna talk about that right now.
Oh, okay. I thought you were ready to change slides.
No, this is my last one.
I have to mention
Oh,
this,
there's one
and
more.
this is kind of off the record, I have to mention this.
We're being recorded. There's nothing off the record.
Your tone, I find, I've only met 2 or 3 people that speak as you do, and I really like it. You end a sentence going up in tone,
Oh, thank
so
you.
it leaves almost a question
Yes.
as you move on. So if
Lots
you-
of my friends say I sing when I talk.
Well, you leave up on a high point. I find it very interesting, so I'm
Thank
sorry.
you.
I took that as you were changing slides.
No, okay, so then other post-employment benefits. So this was the big, GASB implemented this year. It's a lot less scary because we've already done GASB 68. So basically it put the net OPEB liability on the books of the district. Like I said, it resulted in a prior period adjustment. And, it expanded the footnotes for the OPEB. It tells, basically, every time GASB implements a new standard, they say it's to make everything clearer. So, provide a lot more information, basically. So they talk about the actuarial assumptions. We have to show how the liability is affected with either a 1% increase or decrease in the change in the discount rate and healthcare rate. That would be on page 38 and 39 of the actual statements. And you also have to record deferred inflows and outflows related to OPEB. And then it added 2 new RSI schedules, which is the required supplementary information. And those are similar to the GASB 68, where it shows the changes in net OPEB liability and related ratios, and then a schedule of OPEB contributions. So right now those schedules are on page 47 and 48. They only show 1 year of information since this is the first year it's been implemented, but they will eventually show 10 years of information. And then lastly, we do utility billing testing. We like to do this on all first year clients for water and wastewater districts. And we basically, again, test 40 water bills. We did this, we selected them during the month of February and March, and we made sure that they were properly calculated. The approved rate that was being charged was correct for the meter size, and that the meter reading was correct. So we do actually make them give us the meter readings for those months.
I was gonna
and
say,
we
how do
make
you
sure
know if the
those-
meter reading is correct?
We ask the people that keep track of it. I don't know which department it is, but we do obtain the meter reading
Oh, okay.
reports and compare them to what was on the bills, yeah. And again, we didn't have any exceptions, noted related
Let
to,
me just ask a question on the meter reading again.
yes.
Because San Diego just had a large misfire of their meter readings. Does that mean no one was paying attention to it? Or it wasn't being
Possibly.
audited? Or, I mean, something obviously
Possible.
went wrong, just like with Bell, something
Right,
went wrong.
Right,
With
yeah.
this, something went wrong, but.
Possibly,
So part of what happened in San Diego is they still have manual meter reading. People walk around,
Right.
go to the meter and enter in things. They had certain meter service workers that were staying at home in their lazy boy, just making up pushing numbers in there. And then they downloaded their information, generated a bill.
oh my
Right.
gosh.
So the system didn't know any better, but then when people
Interesting.
started getting bills that were ridiculously high,
See, now it makes
they
sense.
looked into it.
I didn't realize that. I didn't realize, I didn't put in a lazy boy factor.
And with that, I will ask if you have any questions.
I've already answered them.
Great, and I did my job.
Well, it was great to hear that you gave a boy's report for West to do, and he was kind of huffing and puffing, so that's good. That means it's not, let me ask you a question on, you do all your paperwork, you do the audit, and it all gets sent to who?
Do you mean like we do our work and then the partner on the engagement typically reviews all of our work that we do in the field?
Right, but after you're done,
Yeah,
and you give your report to us,
uh-huh.
and we have our report, what do we do with that report?
Do we just
file
do
it?
we take it to the
file, or
board?
do we?
Huh?
So you mean after it goes to the full board?
After it goes to the
Yeah.
board,
Do we
the
have to
board
like turn it
accepts
into
it.
like the
Post
state
it on your
organization?
What
I
happens
don't
to
believe
it?
there's a state,
So the government accounting, I think it's GASB that requires that we have an annual audit.
And
So
you have to post it on.
But they don't
your
check
website.
any of it. Really, the auditor's the one that checks it for
Well,
them.
right, in order to be in compliance, we have to have an annual audit, and all it does is it gets approved by the board, and then it gets filed.
It just gets filed, okay. I was thinking to myself, is there someone that really checks this somewhere?
A lot of the, sorry to interrupt, but a lot of the times, a lot of the bond required supplementary information to disclose to your investors is in the annual financial report.
Yes.
So they are one of the primary readers of that report.
And also the state controller, we're
Okay.
required to submit it to the state controller by January 31st, following the audit.
Right, but he files it, unless there's a problem.
No, the state controller report that he's speaking about is called the Special District Financial Transactions Report. There's actually a database that you have to go in and enter information from the financial statements. And then, I don't know if you have to upload your actual financial statements to them.
No,
I don't
we
think
just-
you do, but they do, let me tell you, the state controller's office does review it. It is not a simple, put the information in the database and write it off. I've done many of the reports, and I received, on one client, I'm not kidding, 100 questions related to the report, because they do compare it. They will go to your website, get the financial statements, and compare the information reported in that financial transactions report to what is reported in the financial statements.
They actually have people that check all of it.
I am not joking with you. Yes, they do.
Wow.
Yeah, I received a lot of questions this year on all of the reports that we completed, so
Already
they are
questions
doing
every
something.
year that I upload, that's a shame.
Do we hear back from you next year as to all the questions you might have been asked? What the state controller's office,
No, are you-
if they ask you a question, I'm assuming it's a red flag. They're asking you a question, somebody who looks us over had a question to ask you.
Yeah.
Do we ever find out what those questions were?
I don't think so, unless you request that. Wes actually has
So
them.
I've gotten the questions in the past and just responded. I think his name was Jill something or other. But he always writes me and says, hey, this doesn't agree to your financials on
Yeah.
here. Can you explain the differences, blah, blah, blah. And I have to usually reply back and say, this is because we classified this and this. So you don't typically see those, but I keep track of them.
And Joe works for the,
The state controller.
State controller's office. Wow. So somebody looks over these numbers, that's their full-time job.
Yeah.
And more than I expect them to.
And this year they did do a lot more review because they changed to the web-based reporting, so there wasn't prior year information available for them to look at. So a lot of the stuff that they do is asking, you had this last year and you don't have it this year, why? Maybe it was reported somewhere else. So those were a lot of questions that I got, but they will ask why things don't tie to the financial statements, and then they do post the results on their website.
So yes, he's correct in saying that we had to send them to Union Bank, Bank of America, and I think those are the only two, Union Bank, Bank of America, the state controller. I'm trying to think if there's anybody else. I have a list somewhere where I send the financial statements that are required to, and it's typically for debt and for the state controller.
And the Union Bank is because we have that one loan that we did with them
Well,
10 years ago?
They have our refunding, the 2015 refunding, so that's the bond covenants say that we have to submit an annual audited financial statement to them. And we also have a 2008 loan with them, 2012 I think is Bank of America, 2008 loan is with Union Bank as well.
Is this the first time we've had our auditing firm do a utility bill testing?
No.
I don't remember seeing that before, or is this just more highlighted here with the slide?
It's just more highlighted, and
Okay.
they may have done more work.
Okay.
It's a safe bet.
Like to be thorough.
No, but as much as I'm teasing her, it has been a great experience, and they have been very thorough, and in finding some areas where we could make improvements, it's been a good audit year.
Wes, were you gonna go over the MD&A?
I actually have a brief presentation on the highlights of the MD&A if you'd like to see it as well. It's kind of
Sure.
like a practice for the board. It's a draft though, so if I mess it up, you can't hold it against me.
Yeah, do it.
And
Oh,
actually,
you want me to finish?
yeah. Oh no, you don't have to move. I'll just
Oh,
take your keyboard and
yeah.
mouse.
Forgot. Everything's wireless now.
Yeah. How did you log in? You're not supposed to have control. So as I mentioned, this is a draft and it may change, but I do have. Let's see.
Change it.
Right there. Okay.
You can change that picture any year you want to. He's older now, he's got grandkids.
That
This
is
was-
her.
You saw him today.
See, I didn't recognize him.
Oh yeah, and I think the whole presentation thing came from, was it the branding project or something?
Yeah.
They gave us the recommendation for using a standard presentation.
Yeah.
Yeah, I remember that.
That's a
But I mean, at least
Sore subject.
he still works here at least. So that's
Yeah.
good. Okay, so let's see, going over the draft audited financial report. So, first, I got the last page first on this one. I told you the draft, I got it back. There
I
you
don't know
go.
what page you on, Jim.
Okay, so the financial statements, you are actually missing one section in the draft because the MD&A was just completed, so you're missing pages 4 through 11.
So I don't have the pages you're looking at.
You don't have the presentation that I have here. Yeah, this is
That's fine.
kind of. So the contents of the financial statements are, they start with the independent auditor's report. I'm not sure, is that in there yet? Okay, so that part's in there. Management discussion analysis is typically pages 4 through 11, but that's not included right now because I actually have it here. It's still being finalized. Then you have the financial statements, which are made up of the statement of net position, the statements of revenue, expenses, and changes in that position, and the statement of cash flows. In the back of the financial statements, you have the notes to the financial statements, and then supplementary information, which is, we like to report additional detail as far as the department expenses. It's not required, but we like to have that information, so if people want to see what happened in the departments, they get additional detail. Today I'm going to focus on the management discussion analysis because it kind of gives an overview of the financial statements and gives us to brag about our accomplishments during the year, so it's kind of, it'll keep it short and sweet for you.
It's never been better.
Never been better.
Yeah.
So, financial highlights for the year, we have an increase in water sales of $6.2 million or 26.7%. A lot of that's just from increased demand as we recover from the drought. Water purchases increased by $3.3 million in response to increase in water sales. Capacity fees and capital asset acquisitions, there's not a major change here, so it's not like I'm highlighting it to say that here's a big change. It's really just to show that capacity fees are holding steady at $6.4 million, and that's actually, I think we budgeted $3.7 million for the year. Again, I have to work backwards because I did this. Yeah, so we budgeted 3.7 for 2018, and we actually came in at 6.4, so that's good news. So our capacity fees have been higher than normal, or higher than anticipated, which for us is obviously good. Capital asset acquisitions are holding steady, so construction is steady.
And I'm question is higher than anticipated. Anticipated by what standard do you use to anticipate capital facility fees?
Cap fees are calculated based on the existing cap fee, which is inflated using the ENR index, and the EDUs that we plan on selling per the master plan. So we
At
budget-
some time in the future, but you don't know when.
Correct. And they're coming in quicker than anticipated, which is good news.
Well, my feeling is locally you're gonna see that stop very quickly.
Yeah.
Let's hope not.
You're
And it's
gonna.
possible. So, but for this year though, good news. Okay, so then next, we have an operating income this year of $0.5 million. We have a change in net position of $10.9 million.
Oh,
Okay, and overall, the net position is now $262 million at the end of the year. How the heck I did that backwards? The operating income is mainly as a result of the increased water sales, so that's really caused that. And the net position increase mostly as a result of the increase in capital contributions.
And this is year over year, or budget over actual?
So the income statement is actually just as of this period, so you're not going year over year. This is saying for 2018, we had $500,000 operating income. So our revenues exceeded our expenses, or our operating revenues exceeded our operating expenses by $500,000 for the year.
So the operating loss last year was due to?
$1.5 million. I'd have to look at last year's to refresh my memory on that one.
Less water sales?
I believe so. I think we were recovering from the drought, but we didn't quite. I think our water costs were actually still higher than our water sales, and that was the main reason for it. So, some highlights continued. This year we paid down $3 million in long-term debt without issuing any additional debt, so that's good news.
And was that, we paid down the OPEB?
Well, that's
No.
the second one.
So that's just debt, that's just gonna be the, basically, 2007
Just
cops
the
is now
payments.
gone. We paid $1.9 million on that, and it's been retired, and then payments on the 2008 and 2012 ones as well. We fully funded our OPEB, which resulted in significant savings, because we no longer have to pay the 7.5 discount rate on that, so that's gonna save us money going forward.
How much is in the balance? Is it like $5.2 million? How much is in that fund? NOPEB?
Oh, and the
In
CERT fund?
trust, yeah, CERT fund.
That's a good question.
Irrelevant.
I know that we sent in $2.1 million this year to get it fully
Never
funded.
sounds good when the finance guy says that's a good question.
Well, Mike's not here. He's the OPEB guy. Him and I work together, and I'm trying to learn everything. I'm getting there.
Okay.
We have like 3.5 million, or that's as of this year.
Yeah.
It was
Sorry.
3.5, we added another
Yeah,
1.8,
because-
so
sorry,
it's,
this is as
We
of
added
2017.
2.1.
Is it 2.1?
Yeah.
We paid 2.1 this year.
Yeah.
So, but it has been, from an actuarial standpoint, fully funded. So unless there's a major change going forward, we should be.
And then OPEB is just for retirees that already here.
Well, and the current
Retired.
earnings, for employees, current earnings for when they're retired, like for example, I'm eligible for OPEB. So I'm now earning that benefit as I go.
What year did you start?
2012.
One
I thought
year
it was 13.
1 year before, you're trying to,
Let's check
I was,
that
Yeah.
I
out.
was about 7 months before they cut it
Yeah.
off.
How many
so
employees are gonna be going back to that 13 deal?
July 1, 2013 was the cutoff for it. Glenn knows about that.
And you were.
yeah, I do know about that.
I'm sure.
And you started June 30th?
Yeah. I came in, I was like, when is that?
And just so the committee knows, at our next finance committee meeting, we're gonna be talking about the latest PERS actuarial report, and we're gonna be talking about OPEB. a little bit
Oh,
too.
good.
So, we have both of those next time.
I'll give us something good in December.
Yep.
Christmas cheer.
And Shannon actually already talked about this, but we implemented GASB 75, which basically makes us have to put the net OPEB obligation on the face of our financial statements. This year, it looks like, and I've been talking about this again later, it looks like we have a $1.9 million liability, but in effect, you'll see deferred inflows of $2.1 million because we paid that, so those zero each other out.
Okay, so Gatsby 75 and 89, although they're reporting issues, they're not a financial issue, other than the way you just gotta report it.
They are both reporting and financial issues because we do have to, we have to record the numbers and we have to record the financial transactions for them. Unfortunately, it's a lot of work for being fully funded, but it was an extensive transaction that we had to record. And GASB 89, as Shannon mentioned, that's just not recording capitalized interest anymore. GASB says that we don't have to do that, thank goodness, because that was just, it wasn't difficult, it was just kind of a pain. Okay, and then current year to prior year analysis. Let's see, I'm gonna have to flip backwards again. So cash and investments increased by $8.2 million during the year. Capital assets decreased by 1.6 as a result of depreciation excess of additions. Other assets, I don't have a note on here, I don't think. Oh yeah, I do. Decreases in water and wastewater drove, yeah, it's not a very good note though. Decreases in receivables for water and wastewater drove that decrease of $0.5 million
Why would we have a decrease in wastewater?
in receivables. So, billings were paid down, so if we billed someone for it, it was from last year to this year, and that's a balance sheet item. So last year's balance was, 1.2, and this year's may have gone down to 0.8, so that decrease resulted in other
Do we
assets.
only build 2 entities for wastewater? City of Carlsbad and Olevenheim?
Well, that's for recycled water.
Yeah, that's reclaimed.
Yeah.
Okay.
But those may be components of the other assets as well, the reclaimed billings. So, 3.3, okay, so this is the deferred outflows as a result of the OPEB 2.1 contribution, so that actually kind of comes over as a semi-asset. I don't want to call it that because typically it's a deferred outflow. What they do is they make us put it back in even though we actually paid it, so it becomes like a prepaid. And they call it a deferred outflow. And the actual versus the projected earnings for the CalPERS and the net pension liability. Current liabilities increased by $0.7 million as a result of payables for water purchases and connection fees. It's just the difference in the liability for the year-end accrual. The non-current liabilities, let's see, that increased by $0.6 million as a result of the net pension liability and the net OPEB obligation of $1.9 million. And finally, the deferred inflows decreased by $0.2 million as a result of the changes in actuarial assumptions as calculated by CalPERS. Oh, I'm going backwards again. 11. So that's a lot of numbers so far. I'll throw in a graph on this one just to spice it up.
Oh, yeah.
There you go. That's your graph.
Oh, lovely graph.
So this is the analysis of the district's revenues for the year. We already talked about water sales. You can see wastewater service charges increased by $0.5 million, and that was a result of that'd just be more connections and an increase in flows. When I say increase in flows, because we have a fixed rate for sewer service, some people are charged based on flow as well.
Let me ask you a question. When you skew a pie chart like that, taking it from a 40-degree angle rather than a full frontal,
Yeah.
it does change the look of what happened, is actually happening there. A full frontal, you actually see this is, because the eye doesn't see it, I guess I'm saying is the property taxes look smaller than it actually is if it were to be a full frontal.
So I gave you one graph and you're telling me you don't like it.
I like the graph, but I like a full
It's like
frontal.
your perspective.
Right, because
Okay.
it changes your perspective when it's on an angle.
I can
I'm
straighten
a
that out.
photographer. So I always think someone's trying to pull one when they do something like that.
I'll put a note
They're
in
trying
there.
to make something look smaller than it really is.
Is that
Maybe it's not.
is that the official name for those types of graphs, full frontal?
Yeah, yeah.
We try not to use that.
Okay.
Could be misunderstood.
That's the one. He wants the full frontal. I give it.
No one's been-
I give it.
I just hadn't heard that one.
That's a photographer.
Okay.
Oh, I go past it. Okay, so we talked about wastewater service charges. Property taxes increase as a result of RDA funds that are coming in. We expect that those will decrease in the future. Other revenues increased by 0.3, mainly as a result of the increase in the pumping charges, the rate increase.
We'll go back to that. $294,000.
Because
It's a lot of pennies.
we had about a $400,000 shortfall, I think we figured on the pumping charges. So with the rate increase, we're getting to 90% over the 3-year period. So hopefully we'll be there soon.
So, it does beg the question, because and the reason why I'm asking this is because I've heard some grumbling out there about this over the last 6 months from our customers. So, we determined that the average customer bill was going to be impacted by like $1.12 or something per month. So,
So you want to see what that is?
yeah, now I'm doing the math. It's actually, because if it's $12, $13 a year times 20, 5,000 customers.
23.
Hmm. If it adds
Well,
up, man.
No, but no, that's not true about the average customer, because the majority of our customers don't pay any charge for it.
Yeah, there's only about 15% of
Oh,
our
yeah.
customers are in pump zones.
Yeah, so that's not really a true figure because of that. Not the average.
Maybe the math doesn't crank out.
Yeah, there's a huge difference, those pump
Just
charges.
in my calculator here.
And again, we did the pump charge thing 2 years ago, when we started talking about, prior to that, there weren't any pump charges?
There were. They were just. They hadn't been.
They've never been adjusted. Well, I shouldn't say never. They hadn't been adjusted in the recent
So
past.
everyone, at that point, you could say the average customer because they hadn't been adjusted. Then we adjusted them to penalize the higher, not penalize,
So,
have them pay the full freight
Right.
of the higher altitude.
Apportion the cost to the customers receiving the benefits.
Right. And I agree with this.
so if approximately 15% of our 23,000 customers are paying into this pump zone, right?
Right.
I think there's 2,900 customers in the pump zones.
Okay, so let's just do, so 15% is $34.50. And then if they're paying an average of $13 more a year, it doesn't come nowhere. It's only $45,000.
I don't know where the $13 per year is.
That's
Well,
San,
because-
that's San Diego people. San Leo didn't go up that much as compared to Coronado.
I thought we had figured it out for all the people who were impacted, that it was gonna be like an average of $1.12 a month.
I don't remember that number. I'm not saying it's not correct, I don't remember that.
I think the $1.12 is based on 23,000 hookups.
I know a guy who has all these numbers.
Yeah, he's just not here.
Okay.
Well, the spreadsheet in color.
I know, and then you just plug in a number and everything.
Tell him he was
changes.
missed. Tell him he was
And that
missed.
was certainly one of the, I don't remember if it was an alternative, but some of the pump zone customers, that's what they're asking for. Why don't we just spread all the pumping
Right.
costs over everybody? And I think we had done a calculation that said, if you did it that way, here's what everyone would pay. But then you're asking people to be people at lower elevations to subsidize those in upper elevations.
Yeah, we had to explain them in being subsidized this entire time. And we just didn't realize that they were being subsidized.
Yeah.
Let me look into that, Mike. I'll try.
Yeah, if you could, because they're still grumbling about it, so I wanna make sure I'm giving out accurate information too, if I'm telling them $1.12 on average, if you're in a pump zone.
Yeah.
If it's not right, if it's $4 or whatever, then I just wanna give them the right information.
Yeah, like Rebecca's pump zone went up dramatically. That's Coronado Hills, they had a huge increase.
Okay.
Well, she's not in that same area now, so.
So this slide shows the changes in expenses for the year. G&A increased by $300,000, mainly as a result of less labor being charged to projects. Metalwork actually decreased from last year to this year just as a result of less materials and less outside services.
Okay, now what was the reason for that again?
Metalwork, less materials and outside services. So they just didn't purchase as many things or have as many services as last year. So, and actually this year we're budgeting for an increase in that. And mainly it was kind of timing because they've got a lot of stuff that they had planned last year that they just didn't have time to get done. So we're already seeing a change this year in the 4 months that we have in the monthly financials where their expenses are increasing and they're getting stuff done now.
But for it to decrease at 5.6%, that includes payroll, I'm assuming?
Well, portion of probably be payroll.
It includes their payroll, which should have
Was part
raised.
of that due to the lift station repairs that were being done? Lift station 1, so they were moving less material for a while, so they needed fewer chemicals.
It's only been here a while. You have no idea.
Have they ever operated at 5 million gallons? Have they ever done that?
I do not know.
Probably close on a peak day, not for prolonged periods of time. The plant is sized to be able to handle 5 million gallons per day.
But we don't do it very often, my
No.
understanding is we're not even close to it.
Well, there's two reasons. One is there's not enough demand, and the other is we don't have enough raw wastewater supply at all times without fully operating lift station number 1. But mostly it's on the demand side.
How much of our water is well, lift station 1 doesn't handle all of our water, does it?
No,
Some of it goes directly to Meadowlark.
no, some of
Some of it goes directly to
Encina. Right.
Encina.
If we didn't operate lift station 1, it would all, well, not all of it, but most of the flows would go all the way to
Right.
Encina. But when we flip on lift station 1, it diverts a portion of that flow and takes it down to Meadowlark.
So when you say, is there a flow we're supposed to have go to Encina at all times?
I wouldn't say supposed to. We pay for capacity there, so we have the
Right.
right to send it there. But
But we
there's no
could-
minimum
We
obligation.
could feed Meadowlark as much as they could handle, I'm assuming.
Correct.
We just don't.
We don't, yeah, mostly because they don't want any more. So,
Okay, because there's no demand for their product.
yeah, but I think that demand may increase as areas continue to build out. Carlsbad's still expanding their purple pipe system.
Thank you, thank you.
So engineering increased by $500,000, and that is in correlation with G&A, because when you charge less to projects, it's usually the engineers that do it. Plus, they had the recycled water plan, so that would be that part of that $500,000 as well.
So engineering went up 500,000. Basically, that's employee cost.
A good portion of it is labor and the recycled water plan,
And the
which we still have to look into and get back to you on. That was the reclass that the auditor found where we were charging it to a project and we had to expense it.
So they were still charging it to this project in this last audit.
Yes. So,
But we don't know for sure what it was.
well, we do, I just don't.
Okay, well,
We know what it is, I
well, it's
just,
not on the screen anywhere, because I don't know about it.
and I don't have the answer for you right now, but I'll find it.
Okay, thank you.
Transmission distribution went down by $181,000, mostly the result of a decrease in main breaks. We had more last year than this year, and we'll probably have more this fiscal year than we did last year.
That
so-
will not be a negative for this year.
So total debt is $59.5 million, so that's for the 3 issuances that we have outstanding. Some of the major capital projects that we have that are at least contracted through design are listed here. You can see the spent through June 30th, 2018. The Interceptor, of course, is the largest with 13.7. Tank number 3 at 488, so on and so forth. That's just to show
So,
our
correct
contractual
that.
obligations.
The Interceptor sewer,
Yep.
that's talking about going to Ewa,
Right.
right? Spent through this year, $13 million. Remaining, and nothing's happened out there.
Well, no, there's been phases of that that have been completed.
Oh, there have?
Yeah,
3.
yeah. So
Well,
there's
3
a-
phases are
They did an
completed.
initial pipe bursting phase. It was out by where the Interceptor crosses the 78. And then there was 2 segments, segment 1 and 1A, that were done, or phase 1 and phase 1A, that were done to the, in the Via Vera Cruz area, between Via Vera
Right.
Cruz and.
Through the creek area,
Grant,
yeah. Okay, so, wow, okay. I'm thinking about there's a project further towards Ewa that needs to be done. Is
That's
that
not on
remaining
there.
$6 million?
No, that's the one that's like a $30 million project, and that's the portion that's even further west of these portions.
Right, but if we become a
That is-
no-growth agency, we won't have to do it.
If we stopped building, that'd be probably a true statement.
So capital asset additions during the year, these are the significant additions, and you can see the sewer mains, manholes, and cleanouts. This $15 million is mostly as a result of capitalizing the pipe burst phase 1, and phase 1A of the Interceptor project. Those had not been capitalized previously, but this year the auditors discovered it, and we capitalized them and put them in service. Then you have water mains at $3 million, building and improvements at $484, and then vehicles and equipment at $210 for sewer and $135 for water. And then you
Wes, the top 2 lines, did those include facilities built by developers and turned over to us?
Yes.
As well as things that we built ourselves?
Oh, really?
Mm-hmm.
Is there a breakdown to what we built versus what developers built?
There
Doesn't
isn't,
matter.
there isn't here, but we do have the information. And then, I think we're close to the end here. In considering next year's budget, we looked at increases in water usage as we move further from the drought. We looked at the rates, the 2-year rate that was adopted in September, so that'll be going into effect January 1st, 2019. And the slow but steady recovery in construction is actually just staying steady more than anything, and then increasing regulatory compliance. And that is it for my presentation.
Very good presentation.
Sorry, it's
Thank
kind
you.
of a rough draft, but
Good.
Okay,
Looks good, thank you very much.
Shannon, thank you.
Any other questions? No, with that? Thank you very much, great job. Tell Mike we missed him.
we did miss a lot. Today was like, where are you, Mike?
Yeah, we won, no color chart. Thank you very much, and very nice meeting you.
Nice to meet you also.
Well, it's funny, the last person that I knew that spoke to you, her name was Shannon as well.
All right.
And I think it's very interesting, because you end on an up note, in the sentence, and you just, I don't know why I key in on
Well,
that.
Shannon's probably an Irish name. And
It
they have a
is.
lilting.
It is
Yes,
Irish,
Shannon was
but I
Irish.
think I'm probably like that much Irish.
Yeah, just a little bit.
Yeah.
Blues Traveler, that one song where if I sing with inflection.
So you're done for the year now? Oh.
Not quite.
Can I close the meeting? Yeah?
No?
No. Okay, meeting adjourned? Thank you.